In the given question, there are two presses given, Vanderheiden and Herrenhouse. So we need to calculate return on equity for the each firm. So let's start with the given. So let's start with EVIT. EVIT for Vanderheiden is 30,000. For Herrenheiden is also 30,000. So let's deduct interest. So interest for, there are basically two debts, long-term debt and current liabilities. So we need to calculate interest for each of the debts. So for current liabilities, for long-term debt, which is 10% and this is 13%. If we look in the question, then we can see for the Vanderheiden Press, current liability is 20,000 and 10% of 20,000 is 2,000. And similarly for the same company, long-term debt has 80,000 rupees and 13% of 18,000 is 10,400. These all figures are in thousands. So now this is the same for the Herrenhouse Company Press. So here we can see current liability is 80,000 and long-term debt is 20,000. So 80,000, 10% is 8,000 and 13% of 20,000 is 2,600. So here we get earning before tax. Deducting these two variable, what we get is 17,600 and 19,400. Now let's deduct tax, which is 14%. 14% is of 17,600 is 7,040, while in case of 19,400 it is 7760. So what we get now, this is earning after tax, which is 10,560 and 11,640. Therefore ROE is equals to earning after tax divided by total equity. For Vanderheiden Company, if we look in the question, the earning is 160 divided by total equity is, long-term debt and current liabilities similarly. So total equity is 1 lakh. For the same, total equity is 1 lakh. Therefore return on equity is 10.56% for this 11.64%. In this way we can calculate the return on earning of each of the companies. So now let's see question number B, part B. So the part B of the question says short-term loan is 20%, which means fluctuating interest rate. So now long-term debt is 13% and new long-term debt is 16%. Since no issue is made, so we use the long-term debt 13% old. So now let's start from the EVIT. Again, EVIT for the both of the companies 30,000, where this figure is in thousands. We have already mentioned it. So now less interest. If we look close to the question, we can say that current debt is 20%. So 20% for each of the case. For the Vanderheiden Company, it is 20,000 into 20% is 4,000, and for the Herrenhouse it is 16,000 rupees. You clearly see it. And again in case of the long-term debt, so now this is the confusing part. So what should you use, 13% or 16%? If you look closely, there is no new issue, which means the rate is again 13% that is existing. So now this is the same value, 10,400 and 2600. With this we get earning before tax. So is it the company deducting these values to the interest, that is the cost of debts. So we get earning before tax 15,600 for V company, and for H company it is 11,400. So we can even use the comma here. So now if we clearly look in the next side, that is, so now we go to less tax. So the tax here is 40% again, this is the same rate. So it becomes 6,240, and for this it becomes 4,560. So now we get earning after tax, which we can also call net profit. The amount is 9,360, and for this 8,000, so 6,840, sorry, 6,840. So now we get return on equity is equals to earning after tax divided by total equity. So the value is 9,360 divided by 1 lakh. For this 6,840 divided by 1 lakh, which is 9.36%, 6.84%. In this way we manage the debts. So for the part C, the question says which company is in riskier position and why. So the answer here is due to unmanaged current liabilities, it is as it has higher investment. Herrenhouse Publishing is more riskier than Vanderheiden Press due to lower current asset, and short-term loan is higher in case of Herrenhouse. So yes, of course, Herrenhouse is more riskier.